Well, guys, we're seeing it again. Massive moves on markets and a potential of euphoria re-entering just like it did in 2021. So what exactly is going on in the world of stocks, commodities, and cryptos? In today's video, we'll break down the short squeezes that are occurring, the concentrated market that we haven't seen in quite some time, and what we expect in terms of data and statistics over the next couple of months when it comes to volatility. Don't go anywhere. We've got a lot to discuss in Pepperstone's new show, The Macro Edge. See you in a moment. Well, welcome back everybody to the Macro Edge and Pepperstone's new show. In today's video, we'll be going through everything you need to know right now about the macro that's happening, the key levels, and of course, what's going on with the flows in Wall Street. My name's Tom, and we've got a lot to break down today because we just saw 79% of stocks up over the last 24 hours in markets. However, the key thing was it wasn't in the biggest ones. So why do we need to be paying attention to that? We'll take a look very, very soon. Let's kick the show off here with Ether, though, which of course is Ethereum, and it was a very good week for people holding cryptos, and particularly Ethereum, as we saw absolute records being broken when it comes to inflows into the latest exchange-traded funds. Now, many of you guys may trade these particular pairs, and as you can see here from Bloomberg's latest report, it was the largest inflow that we've ever witnessed in history. And this brought with it, of course, the inevitable short squeeze. People that were caught offside trying to go against this trend have been caught. And you can see it here with the latest Glassnode data that basically shows that there have been liquidations at several points over the last 24 hours that are now the second largest for 2025. So what does this mean to the charts? Well, of course, one of the biggest things about all of this has to do with we just hit a key resistance. And we've got the chart coming up later on today's video to really show one of the most important points now for Ethereum. Can it continue to squeeze higher? Of course. But now that everybody's talking about it, it could also become a crowded trade. So I'd be interested to know your comments down below on whether you think Ethereum has hit the top for now, or has it got a lot more legs in it? Let's now take a look at what's going on when it comes to the Fed and, of course, when they do an interest rate cut. Now, you may be aware by now that the inflation figures this week, while up, were a little bit moderated in terms of what the economists expected. They weren't absolutely too high, and therefore the chance of interest rate cuts coming in over the next couple of months from the Fed increased drastically. Now, you may think, well, how can the Fed cut when we've got stocks at all-time highs, gold at all-time highs, and so many other markets realistically up there? Well, the key is that this has happened before, and when it has happened, you'd actually be probably not surprised to know that it actually usually leads into more bullish action in the markets. According to the latest details here from Ryan Detrick over at Carson, he's actually found that the next 6 months and 3 months were pretty decent. But I think it's interesting to note the next month because they were actually a bit more of a coin flip in terms of how the markets reacted as they digested an interest rate cut. So why is all of this important? Well, of course, it's us, the retail traders out there that are starting to make up a huge portion of this market. In fact, retail options, which of course usually suggest speculation to a degree, have now become the 6th strongest buying streak we've seen since 2020. At the start of today's video, we talked about euphoria, and this is really a read that does tend to lead into those particular styles of events. What about allocations? Well, allocations to equities are also at their highest level since 2007. And according to the latest data here from State Street Markets, you can see that we're getting up there to a pretty high level that usually we don't see other than periods of time that have been around the dot-com boom and, of course, 2007 itself. Now, could this be a worrying sign? Well, it's just something that you need to pay attention to. Why? Because it has happened before, but remember, it stays sometimes very highly allocated for quite a period. Still, one of the big breakthroughs of the last couple of months. Another one was semiconductors. Now, if you've been watching markets, you guys would know that semiconductors are a huge part of these markets, possibly and arguably the most important thing when it comes to AI and the rally that's happened. You'd all be familiar with NVDA, but as it turns out, when semiconductors do go on these epic runs like they have in the last couple of months, according to Nautilus's latest investment research, they've found that there is usually a little bit more to go. In fact, 6 months later, you can see here the stats were pretty favorable towards semiconductors, although just like we mentioned before, the chances of a dip in between that does become a little bit more of a statistical fact. Now, of course, don't go do anything off this. It's not by itself enough, but this is what we've been seeing, a concentrated market that is led by pretty much 10 stocks, a bit of semiconductors, and the rest of the stocks haven't been coming with it. That was until the last two sessions. As you can see here, Frank Caparelli from Cap Thesis actually broke down the percentage of stocks that were actually increasing over the last two sessions. And we just had back-to-back, well, it's actually 80%, I think, plus, and a 79% day. This means that more stocks in the market were starting to be rotated into. And this is because the inflation figures this week came in a little bit softer than expectations were there, opening the idea of a rate cut. What's that going to affect? Generally, we see, of course, markets specifically in the Russell 2000 find those types of bids. And of course, that's something that we'll continue to possibly look at. We've got some charts coming up for that soon. In terms of the dark pools, in terms of the largest Wall Street trades, we haven't seen too much activity since we've got to these highs. We have had some activity coming through on things here, such as UPRO, which is a large S&P 500 fund, but it's not enough. Usually what we like to see, and we will be tracking this over the next coming weeks as we continue with this show, is lots of large transactions happening at key levels. And if we tend to see that, then of course we say, okay, well, that's where the flows are going. Couple of other key things about the upcoming months. As we mentioned, it's an interesting time, Q3. So Q3 in markets is often seen as volatility. Now, if you have a look here at the equity clock report, you can see seasonality wise at the back of July into August, into September, into October tends to be the most volatile time. And this really leads us into, of course, that euphoria comment we had. Similar times such as 2021, 2024, during that, of course, semiconductor boom that then led into a sell during August, we saw euphoria get to these peaks. And whenever you get up to these levels, you've got to be paying attention because, of course, trading and investing is all about risk management, and it's all about being able to mitigate that risk when things potentially come through. Does everyone know the market's in a bull run right now? Of course. Is the trend going up? Yes. But are there signs of potential pullbacks? Hey, that is something that does tend to potentially happen. You can see here Ryan Detrick also with some great stats when it comes to presidents post-election years. Well, if you didn't know this already, when it comes to second terms, and of course Trump's one is a little bit unique, but when it comes to second terms, often August is a little bit weaker. Now, we haven't seen that so far, but we've still got half the month to go. So we'll find out whether that occurs. And do remember, like this Ned Davis research says here, you can see that when you start to get up to these periods of August and September after having cycles similar to this, this is where volatility starts to come in. And I think that's key for all market traders, whether you're somebody trading in stocks or indices, or of course you're trading currencies, or realistically even commodities. If volatility comes into the stock market, it tends to come into everything. So let's now jump into the charts and we'll take a look here at Ethereum to kick things off. And as you guys can see here, we've got a pretty decent rally coming in from Ethereum, and this has created that massive short squeeze. Now, I mentioned before that we're starting to hit a technical resistance. So if you actually zoom out a little bit, Ethereum's close to all-time highs. And we haven't, of course, seen this since 2022. Now, why is it so important? Well, when we enter these all-time high periods, this is where you start to see the potential of kind of a rally that takes out these highs and then some form of consolidation. Now, at the moment, this is a trend that you would not want to usually go against. The trend is often your friend. And of course, by most metrics, you're still seeing a very bullish market. Now, could we see weakness here? Absolutely. And I think some traders may be taking profits at this zone. But for now, the trend is still intact on the bullish side. And we do need to remember that there are plenty of people out there that are trying to go against these trends. And of course, that's why we're getting that squeeze data and liquidation. So hopefully it's not one of you guys, but just remember, following the trend has been one of the better strategies in terms of at least 2023, arguably to 2025. Now, here's a chart that most of you are probably not familiar with. And we've done this with TradingView, which of course you can connect with Pepperstone's platform. And what we've done is we've added the MAGs, which is the Magnificent Seven, Oracle, PLTR, and AVGO. And you may be maybe not surprised, but I was when I first figured this out in terms of a stat, that if you look at these 10 stocks, they've made up 80% of the gains of all the market pretty much on the S&P when it's come to the last couple of months. Now, over the last 24 hours, we saw rotation starting to appear out of these. These were actually weakening a little bit. And where did that money go? Well, it was going into some commodities such as silver, but it was also going into the Russell 2000. So we can see here some pickup here in the combo between the Russell 2000 and the S&P 500. And what this is starting to suggest is that we may be moving into the small caps finally starting to turn bullish. You can see here, new high has been formed, and there's not too much left-hand side resistance. So there's a potential here that maybe we could get up into this level. Now, small caps have been really talked about for a very long time, and they haven't done anything in the previous years when people expected them to. But this is, of course, one of the big storylines going on right now. And the reason why is quite simple. A lot of small caps, they just don't make any money. So what this means is that, of course, we're seeing the yields potentially going down and interest rate cuts coming through. And this is, of course, helping those smaller businesses maybe refinance or, of course, get cheaper interest rates. And that's very important to businesses that don't necessarily make money and are cash burners, which we do see quite a lot there. When it comes to the US dollar, of course, the dollar has been up, down, all around. This is one of the most crowded trades right now in terms of crowded shorts. Some of those shorts have come off, but what we've seen in the past is that when you get a really crowded trade, you often see a lot of consolidation. So we kind of expect it to potentially be in a range for now. And that's actually what happened with gold as well. So although, as many of you guys know, we've been very bullish on gold in terms of the technicals and the charts and the macro and those types of sides, you can see here that we have a market that has been consolidating or doing what I like to call a pit or a pullback in time. Now, why is that important? Well, this type of thing happens when you get to a most crowded trade. And just a few months ago, back in April and May, people were the most bullish on gold they've been pretty much for a very, very long time. And since then, the markets have consolidated. So it's usually a good read to say, okay, we're going to get more sideways action. Of course, you could still break the zones, but that's what we've seen on gold. Speaking of gold, could it be an ascending triangle? Obviously, key levels, 34.50, something we're looking at. And silver showing a little bit more strength. And if you look at the macro side, silver is actually still playing catch up to gold. So it's still looking like a pretty decent pair. On oil, it's pretty weak at this stage. Not too many opinions here. Somewhere in here is kind of the level of demand that you would generally expect. But oil, of course, has weakened kind of across the board. And when it comes to the major stocks out there at the moment, Tesla's been finding a little bit of, I guess, strength over the last couple of sessions. And of course, we've also seen NVDA continue up, and it hasn't actually shown weakness. So at this stage, some of the big leads, particularly NVIDIA, are still leading this market. Some other things to note is that stocks like Coin, they've been struggling a little bit, which is unusual because they often have some correlation to Ethereum. And we've also seen Chinese markets start to pick up. Particularly to note here is the 50 exponential moving average, which you can see over here, has been causing markets to kind of find bounces in recent times. We've also got the US 2K breakout that we discussed before, the NASDAQ making all-time highs, which obviously at this stage is continuing on. So for now, we don't have, of course, any signs that bears are coming through, except for that top 10 kind of stocks starting to find weakness. And in the space of cryptos, we see here that Bitcoin just made an all-time high. And this is kind of important because what's going on is we have this shooting star style candle, and then we've now moved above that. And that suggests that there's a lot of Wall Street flow going into, of course, the crypto markets. Now, in terms of news ahead, there are still a couple of key things that you want to be looking at. You can see here, guys, that we have PPI coming out in less than 24 hours. That's kind of an important figure when it comes to inflation for the markets. And of course, we also have core retail sales on Friday and prelim UOM consumer sentiment, which often this one's used by the Fed a decent amount. If you enjoyed today's video, if you enjoyed this Macro Edge show, please remember to subscribe in the comments down below. And as I often like to do, in terms of summaries for this market right now, the S&P 500, the NASDAQ, and now the Russell is getting rotation into it. The key is probably going to be watching those top 10 stocks and see if they significantly weaken. If they made up 80% of the gains so far, if they start to significantly weaken and break through that downward trend line, it could be a sign of mega rotation. And when that happens, of course, it may give us a pullback. Some interesting times ahead. We do expect volatility over the next couple of months. And as you guys always know, there's always another opportunity in markets. So come from the abundance mindset. We always find it helps a lot. Thanks so much. We'll see you in the next one. Bye for now.